as I see the silver gold spread as imminent. It's not yet broken out, but my assessment of the momentum of that spread and the spread itself says, no, we're ready for the breakout. It's about to happen. And I think when that happens, that's when you see silver go berserk and catch up for the error of the past 50 years.
Well said.
My suspicion, where do I think silver might be in six months? Well over 100, maybe 200.
Michael Oliver, a leading momentum analyst known for his precision in structural market shifts, believes the silver-gold spread is on the verge of a historic breakout. While the move hasn't officially triggered yet, his momentum indicators signal that the spread is ready to explode. According to him, this setup could mark the point where silver finally corrects decades of underperformance against gold, what he calls catching up for 50 years of error. Once the spread confirms, Oliver expects silver to go berserk, with prices potentially surging well above $100 and possibly even reaching $200 within the next 6 months. It's not speculation, he notes, but the mathematical reality of momentum finally unwinding in silver's favor. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
We think we're at a point now in the gold-silver move, particularly silver, I'm going to emphasize that, where what's about to happen is a change in reality, specifically mostly for silver. While gold has gone up in massive waves since it was legalized in 1975, both of the prior bull markets were 8-fold dimension ratio moves. We're only 4-fold from our bear market low in 2015. So everybody's screaming how it's overdone. They're looking at arithmetic charts. They're not looking at logarithmic or ratio charts. We're in a somewhat accelerated price angle of ascent. You can see it on the charts. Silver recently nipped out its highs of the past 50 years. Gold's way above those. Layer, breakout, layer, breakout. Silver still caught in its initial layer. We did a recent comparison in our weekly report showing a couple of examples of some base metals, copper and lead, for example, going back to the 1970s, where they were in ranges for decades, broke out, new reality range, etc. In fact, that happened for both of them in either 2006 for copper and 2007 for lead. What happened after they were in this boring multi-decade price range, an old reality, they quadrupled within a couple quarters, again, at different times, so different situations, quadrupled in price like a bomb had gone off, okay? They moved out of their old reality into a new reality, and if you look at what's happened in the decade since, it's a new layered reality that's roughly 3 or so times the price level of the previous. How come silver is still caught in its old 50-year reality, okay? Something's wrong there. It's to scratch your head and say, now maybe it's manipulation or whatever. Maybe it's just a market made a mistake. We all know that. Markets make, investors, what do they do? When a stock market bubble occurs, .com, for example, or the mortgage crisis bubble, and when it breaks and collapses, then everybody wakes up and says, oh gosh, I wish I'd known that it was a mistake. It shouldn't have been where it was. They recognize it and you go into a new reality. The same happens sometimes at major bottoms. A given market might go too low for too long, bore the heck out of people who are looking at it, and they say, piece of garbage, I don't want to own that. And then suddenly it explodes up out of the hole, making up for the error it's made. I think we're on that situation with silver right now. Nothing in terms of price momentum. In other words, normally we look at price charts, which everybody wants to see, but below it we do a momentum study of the price action by oscillating those monthly price bars or weekly in their relationship to a given moving average. Either they're above it or below it, therefore you could get an oscillator, okay? And it builds structures, the kind of structures that price chart guys look for. Triple top breakouts, downtrend lines broken, etc. Silver is totally green light in that regard. And we said that back in June when silver for a third time was coming up into the mid-30s. It had been to 35 in October last year and March of this year. Dropped down to 27.5, came roaring up again. And we said when it got above 34, watch out, we're going to break out, but it's going to accelerate the angle of ascent. July, August, September, 4 months, we've gone from 35 to 53, and right now we're 47. What a percent move. It's such a momentum knew that. So from a price momentum perspective, there's nothing more to say. It's already positive. The key is silver spread relationship to gold, which has been over the decades, it's very low in relation to multi-decade levels. But it has a structure where you can look at that spread chart, which is divide an ounce of silver to an ounce of gold, express it as a percent. Right now, silver's like 1.2% the price of gold, which is very cheap. If it breaks through that structure that we've defined, and in our reports we give you the exact number, and you close a month above that spread level, it's saying, I'm breaking out of my spread. When you go back and look at that explosion we had in late 79 to 80, where silver had already been going up for years, and suddenly it went berserk. It like quadrupled in 6 months. Or in late 2010, about 6 months before it hit its peak at 50 in April 2011, silver had already been going up for years, and suddenly it went berserk. It doubled in half in 6 months.
Yeah.
If we do something similar, the thing that told you back then that it was going to go berserk was the spread. Silver was already full thumbs up, momentum-wise, but what told you that I'm going to lift the lid off in relation to gold? And it was the spread. It had similar structural ceiling on it. It broke through, and at that point, the spread said, I'm going to explode. We're facing that door right now. So that's the technical we're watching, not the price or the momentum of price. As I see the silver gold spread as imminent. It's not yet broken out, but my assessment of the momentum of that spread and the spread itself says, no, we're ready for the breakout. It's about to happen. And I think when that happens, that's when you see silver go berserk and catch up for the error of the past 50 years. My suspicion, where do I think silver might be in six months? Well over 100, maybe 200.
Michaeloliver, one of the most respected momentum analysts in global markets, believes silver is poised for a historic transformation. He argues that while gold has already entered new price realities over the decades, silver remains trapped in its old 50-year range, a market anomaly long overdue for correction. Momentum structures on silver's charts, he explains, have turned completely green, signaling strength beneath the surface. Is the silver to gold spread, which he says is on the verge of a decisive breakout. Once that spread triggers, silver could go berserk. Oliver's models suggest that within 6 months, silver could easily surge well above $100, possibly even to $200. Let's get into the interview.
Very good point. Let's go back to gold to get a spread relationship. If you plot gold in relation to the S&P, since the year 2000, it's been very zigzaggy, but it's been net up dramatically. Okay, gold is beat over that 20-year period. October 2020, October 2000 to this October, 20 years. Gold's gone up like 16-fold, S&P's gone up 4.5-fold, which is the better place. Yes, there have been some big bear markets in gold, also the stock market, but net on balance, gold's beat. Now, however, since its 2011 peak in gold, its spread versus the S&P also dropped, meaning gold underperformed the S&P during its bear market, 2011, 12, 13, 14, 15. Starting in about 2015, if you plot the spread, divide gold, ounce of gold into S&P price, and plot it month to month, percent, you've been in a basing range where at the top of that range, the gold performance will surge up to a given level and stop, come back up to a similar level, stop, and has built a beautiful trend line going back 11 years with 4 pivot points hitting it. Intra-month this month, of course, we have, 3.5 days left. We've been out above that breakout point. We backed off hard last week, when we had the drop in gold and silver, and I don't know how we're going to end the month. But if gold is 60% of the price of the S&P, it's a major breakout. It's telling you, I'm gone. Okay, it's going to break out. Now, when that spread breaks out, the net price of gold it's just the beginning. That spread is telling you at that point in time when you break that spread out, and if it doesn't happen this month, it's going to happen soon, I can tell. In fact, if you run a relative performance chart of Bitcoin versus gold, it's been up and down, but you can go back to 2021, 22, 23, and so forth. And while Bitcoin has dropped versus gold, or gold's dropped versus Bitcoin, come back up. Right now, gold has been as good an investment over the last 5 years as Bitcoin. So people who claim Bitcoin's done better are wrong. It's flat.
Michael points out that gold's real strength lies not just in its price but in how it performs relative to other significant assets. When measured against the S&P 500 since 2000, gold has outperformed by a wide margin, rising roughly 16-fold compared to the S&P's 4.5-fold gain. Despite periods of correction, the long-term trend remains intact. Now, Oliver's momentum analysis shows that gold's spread against the S&P is once again nearing a decisive breakout point. If gold closes this month near 60% of the S&P's value, it confirms that breakout and signals a new leg higher in real terms. He adds that even Bitcoin hasn't outperformed gold meaningfully since 2021, proof that gold remains the true long-term leader. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.